Good morning, everyone, or I guess not quite afternoon unless you're in Greenland or something. Thanks so much for joining us back here for our second Proof of Delivery podcast. We were really psyched with the engagement we had in our first episode that we decided that it seemed like there was enough people out there who would tolerate Ken and me talking for 40-ish minutes that we do this again. So really glad to have everyone back here today. Ken, how you doing?
I'm great. We're both together for a week in Denver. We both made it home safely, although perhaps a little late. Long weekend coming up. Weather's nice. How can I complain?
Love it. Yeah, we're coming off a week where we spent a bunch of time with basically the entire DAT product, tech, engineering, design, leadership team, and friends like me and Ken, and was really awesome. And I think it was a great opportunity for us to talk about exactly what this podcast is all about, which is how are we solving problems for our customers. So I'm feeling just like Ken, a little bit tired today, but really excited and inspired about what we've got coming. We've got some deliveries that we're excited to share with everyone later in the episode. But before we get into all of that, Ken, any thoughts from around the freight world this week? Any lessons you want to impart with folks? Things that you're noticing or thinking?
Oh, I think this is tough. I saw, I forget, someone made a really thoughtful post this morning about it. Feels awfully like the great toilet paper shutdown of 2020, but without the kind of sugar high that's going to come after with the port traffic, and blank sailings have made their way back into the kind of common freight lexicon at the moment. So I think calm before the storm a little bit, and it's kind of worrisome. We have a little bit of this on the agenda later, but I just think it's a little worrisome, a little nerve-wracking where we are at the moment.
Yeah, we can definitely talk a little bit more about tariffs. I know that's probably top of everyone's mind right now. But before we get into that, some perhaps more positive occurrences in the freight world this last week. I'm coming off of being at TIA. I guess it finished up about a week ago now. And let's just talk about a couple of the trends that we saw there. I know, Ken, you weren't actually there in person, but you're so plugged in that you know what's going on. What do you, maybe not, what have you noticed the chatter post TIA be about most?
So let's start with a positive because it's Friday. I think innovation continues in our space, which is great to see. I mean, I'm a bit of a TIA long timer. I think this is only the second one I've missed in 10 plus years. And, it used to just be a pure relationship event. Slinging freight, the new feature in McLeod version X+1 kind of vibe. But really a lot of companies out there pushing the envelope, doing really cool stuff. More of a focus on the pricing and analytics and optimizing your business. So I think it's just cool to see that part of the industry continue to move forward in a way that I think most folks may have been skeptical that momentum continued post-COVID, post like the great digitization that happened during COVID. And it's kind of good to see that it's still there.
Yeah, I think there's kind of been a rationalization of expectations of what all of the investment in tech in the space is going to actually be able to do and achieve. I think even, I don't know, maybe even a year ago, when I guess ChatGPT launched in late 2022. So post that, there was all this chatter about how, oh my gosh, this is going to accelerate everything that we thought was coming. The robots are coming. Humans are no longer going to be involved in brokerage. And even over the last year or two, guys, I spent a lot of time just talking with both the vendors themselves, but also customers using AI phone call tools. And there was a lot of chatter a year or two ago about how, okay, yep, this is the end of the broker on the floor. And the conversation this TIA around that topic seemed to be a lot more about tech plus human and a little bit more just rational, not fatalistic thinking about or irrational expectations about what this tech is going to do. So I think it seems pretty healthy in a lot of ways to me.
Yeah, I think to kind of sandwich that a little bit with a little bit of pessimism and maybe snarkiness is that I think AI apathy is definitely creeping in.
Yes.
And just fatigue almost. It was the first time, and again, I'm not going to call out anyone particular, but there's a company that has really a reputation for stellar releases and press releases and like super cogent, like what they're working on, clearness of vision, issued a press release on new product. And I asked ChatGPT to make sense of it, and it literally failed. It couldn't tell me what the new product was. But it's just like, I think the uptake with AI has become so tremendously quick that I think people are able to spot the BS a lot quicker. Just slap an AI in a press release isn't going to goose your valuation perhaps the way that it was in 2020 or 2021. And a lot of folks came back, and I heard from a couple of our key customers that they went there looking for maybe an AI vendor to do some back office automation. And they're like, I'm not touching that with a 10-foot pole right now, because half these companies might not even be in business by next TIA.
Yeah, well, that's another interesting topic of the last couple of TIAs. I think there's been a lot of, everyone's this is going back to the M&A point that we talked about last week or 2 weeks ago. I don't know if a lot of these companies are going to be around and this time next year, next TIA. But what I have found interesting is everyone still persists. Like, it's pretty remarkable how, I know we talked about how we're expecting this consolidation to come, and I am a believer in that. But much like the freight recovery, it feels like we're still kind of just on the precipice of that, or some businesses that have been around for a while having to make really tough decisions about, do they continue soldiering on?
Yeah, we're a few minutes in for the first real Kenism, but I'm going to relate this back to The Last of Us, which the new season's out. The thing that I've learned most in being in corp dev for the last year, which is a new discipline for me, is that, like, in a lot of cases, venture capital money is like the cordyceps virus, the fungus that kind of takes over its host. And like, there's a lot of these companies that are out there that aren't making any money and aren't really doing anything, but there's like no mechanism for them to actually, they've made it to like a shelf whereby they're not going to kind of air quote go out of business. Because like by the most classic definition, they're not in business. They're not making money. Like they're subsisting and existing on the drip of venture funding. And so I think that's something, and we talked about it in the first episode, I think that's something that's really going to get sorted out this year, is kind of the reckoning of cash flow negative, non-EBITDA accretive startups.
I'm making a note on my calendar to check back in first week of the year to see if that's happened.
And maybe not. Maybe I haven't seen obviously we haven't gotten to the season finale of this Last of Us, and I don't, no spoilers here. I haven't played the video game, but maybe the ending is that they do persist indefinitely.
Yeah. Well, I haven't watched any of it, so maybe I'll add that to my list. Now that White Lotus is over, I need a new show to dig into.
Yeah, it's good. It's really good.
Should we talk tariffs?
Let's talk some tariffs.
Can I bring up Ken's? I'm going to bring up Ken's post from this week. Maybe we look at this to start, which is kind of a scary load post graph. Ken, you want to walk us through what actually is happening here based on what we're seeing in the network, and then we talk about more broadly in the market?
Yeah, so just to explain the chart, network activity on a network like ours is even if you take weekends out, it's still very bumpy, right? Like day to day, there can be changes, and different weekdays have different volumes. So we kind of do some moving average analysis. That's the smoother lines in the middle. But what you're seeing is that in the run up to all of this, we heard things like buzzwords like inventory pull forwards and pre-stocking and all of that. So that's what was really driving the kind of like barometer for us, or the demarcation line of when things are really rocking and rolling, is when we're averaging like 1 million load posts a day. Right.
Right around here.
Yeah. And so like we were above that for the first time in a long time. We were reaching like 3-year highs, kind of dating back to the end of the pandemic. Thought things were going really, really well. And then I don't know, what is it? I don't have my like China tariff clock app loaded, but what are we at, like 245% tariffs on Chinese goods? That's effectively a non-starter. Like that is going to just put the lid on everything. So we're starting to see this pullback in network activity. Not tremendous. There was a chart floating around, which I'm not going to go into great detail about, but there was a bit of a kink in the data pipeline of another provider, and it kind of showed essentially the freight apocalypse, which isn't true. So we're not at the freight apocalypse. We're kind of seeing a bit of a pullback. It is counter seasonal. We should be going up into the right, and we're kind of going down into the right, which is less than bueno. But
yep. Yeah, I'm curious for any of our loyal listeners and fans, chime in the chat what you're seeing out there. If this is, what is your internal sentiment? What are you feeling from the board? What's happening on the floor out there? Let us know. let's talk a little bit about specifically. I chatted with the dean briefly this week, and just some specific insights on what's actually driving those changes. What I'm seeing, and Ken, you're the expert here, is that those kind of leading indicators around textiles and clothing imports, those have fallen off a cliff really, really, really quickly. And as leading indicators for what's to come over the next couple of months, to your point, it hasn't been freight apocalypse yet, but some scary leading indicators out there. Are you seeing anything else that is a little bit worrisome?
I mean, so port volume, we don't. There are good sources out there for like when the stuff's
Yeah.
still on the water, or they're building the manifest to come over. We don't really dabble in that too much as a primary data source. We obviously look at it for market analysis. So the inland volumes are slipping a little bit, but they're still in that rush mode to get things unloaded. And I saw Ryan Peterson over at Flexport tweeted that they've got 23 boxes on one of what they presume is the first ship that's going to get hit with the kind of retaliatory tariff load. And so that stuff you're going to start to see, like t-shirts and all of that kind of like clothing is going to get absolutely whacked in all of this. I think there's probably some hope for like at home being North America, that getting maybe a little bit more settled, which I think will free up a little bit more of the longer haul, non-port sensitive traffic. But this is too much. Like we talk all the time, almost ad nauseum, that like our market loves volatility. DAT loves when markets are chopping up because we can help our customers. Like we did the IQ podcast every week. Dean and Chad still do, but when you're coming on every week going, the market's flat, the market's flat, the market's flat, it's like that's no fun. Maybe if you're a shipper, that's super fun, but not for us. And this is just too much. This is just like, who wants to put a container on an ocean vessel and get slapped with 200% tariffs, and then next week it's all reversed and you could have saved $30,000-$40,000.
Yep. Yeah. Have you had any conversations this week or last with folks at brokerages who are thinking about how do we deal with this? Everything I heard at TIA and the customers I talked to was very much, we haven't seen a whole lot quite yet, so we're kind of hanging on tight and bracing. But I guess the benefit is that everyone has been in kind of operate and manage your cost structure as efficiently as possible for the last couple of years. So I just don't know how much more you really can do to prep for this.
Yeah, I mean, as a broker, it's tough. Like if you're heavily exposed to Mexican cross-border freight, which a few of the larger brokers are, certainly a lot of niche brokers are, I think that's probably been the topic du jour.
Yep.
If you're just a general FAK broker, which is not an insult for those less freight, it's freight all kinds, general freight. It's really nothing you can kind of do. It's not worth your time. It's like us worrying about the stock market. I don't manage a hedge fund, right? Like, so I don't, it goes up, it goes down. Yep. Talk to me in 25 years. I will say that it's probably messing a little bit with your RFP strategy. If you're heavily involved in contracting with shippers, their level of nervousness and time, and I think that's probably going to be a more complicating factor than like day-to-day spot loads. Yeah.
Cool. All right. Well, before we go into what DAT delivered, anything else you're seeing in the industry this week, Ken, that you want to talk about?
No, I mean, like I said, when this market gets quiet, something's up, right? Like it's our industry. The reason I think all of us love it, those of us who stick around, is because it's like going to an Italian family reunion every time you get freight brokers or carriers together. Like, hey, beepita boppita boopita. And it's just been quiet. I think people are scared. I don't know that people will admit it. They're worried, they're nervous, they're anxious. This feels, if you were in this industry, put yourself in the mind space of having an absolute terrible 2019. And 2019 was terrible. They don't give awards for like the worst year in freight, but I think like 2019's up there with 2024 by all accounts. And you roll out of that expecting all of the experts, all of the market signals telling you that 2020 is going to be a systemic recovery. And then April, the entire world shuts down and there's like nothing, like you can't leave your house.
Yep.
This feels very, very, very similar to that in the freight world. So,
well, on that positive note, this is an ominous podcast this morning. It's overcast here in Chicago too. I'm feeling a little spooked. Let's talk about things we can control. Within the DAT world, what we're actually delivering on right now, this is again a big part of what we're going to be doing every other week, is talk about our commitment to our customers and to the freight world about what we're actually doing to move the ball forward. So we actually have two cool deliveries to talk about this week. So I'm going to pull up our first one, which is our forthcoming shipper spot for brokers. So here we go. All right, so let's talk about this. Ken, you're the pricing guy. Put me on the spot here. Why is this important?
Let me talk. So as a shipper, it's critically important because you're becoming more and more spot exposed every day. And when we say that, I don't mean like as a percentage. I'm not going to cite my sources. It's just like the spot market has become part of the fabric of your job more than it was 10, 15 years ago. That's just a fact, right? But for brokers, DAT has largely helped with and been the market leader in the 50% of your job that is buying trucks, right? But the other 50% is selling to shippers. And so this shows you insight into the other side of the coin in a way that previously really only DAT employees and our upper echelon of data consumers could interact with, because the data was very in raw form. So our team recognized that, put it into a finished product. So now, previously you can kind of get there by looking at shipper to carrier contract and then broker to carrier spot. You don't have to do any of that transformation now. This is shipper to broker spot and broker to carrier spot. And then you can start doing margin imputation, which is like, am I staying in line with my gross margins for a given lane? Am I selling effectively to my shippers in the spot market? It can help you tune your pricing models. It really is a huge unlock for that mid-sized broker really looking to break through and hone in their pricing algorithm.
Yeah. Let's talk a little bit about, I'm wondering if anyone's watching or looking at this graph and see, okay, it looks like these are obviously highly correlated. Broker spot and shipper spot are really, really tight. Why is this actually so valuable? And how can a broker use this in a way that they couldn't just impute from what they're getting from our broker to carrier spot?
So this is interesting at the national level, but it's not helpful. I mean, this is like, if you compared the like average height of biological males and females over time, you're going to see the same exact chart. Whatever the average spread is what manifests here. So like what you're actually seeing here, and again, great marketing by one of our top analysts, Tamir, but like percent difference by month is actually broker margins. Because the percent difference between the buy and the sell, I mean, there you go. You can now bill me for 1/10 of an MBA. That's your margin. But it really gets interesting at the lane level because head hauls, back hauls, balanced lanes, margins expand and contract. There's interaction with the contract market. So when contract markets are in flux, you see meaningfully shifting margins at the lane level. So this is like, the reason this is so powerful is because now it's calculated at the lane level, just like a rate view rate is calculated. And I think that's the secret sauce here to really help you price. Because look, here's what a lot of brokers do. I've done it. I've been there. And I know a brokerage that went from nothing to $1 billion a year on adding 15% to every estimated load cost. But the world's changing with API portals for shippers. It's not going to be that easy anymore. And yeah, so this is cool to look at the national level. It's a great way to like talk about margins without talking about no one likes to talk about margins, right?
Yeah.
I do, but not a lot of other people do.
Yeah.
So that's why.
Okay.
Go ahead. No, go ahead.
I was just saying, speaking of APIs, that's how this is going to be available first. So if you're interested in getting access to this, we're not quite ready to release it within the UX, but available very, very soon via API. So reach out to your rep, and excited to start to get some feedback from folks who have been using this out in the field. For sure. So let's talk about other delivery, which I'm personally very excited to talk about because it is trucker tools related. But we don't need to talk about fraud and why it's important. And I will say it was interesting being at the TIA this last week because fraud is obviously still a very hot topic, but I think everyone's kind of learned how to work fraud concerns into their day to day. It's really just become like, it feels like part of, just part for the course about what you need to be thinking about as a broker. And everyone's really built fraud prevention into their operational processes day to day. Whereas 2 years ago, it was like, oh my God, this is actually an existential threat to so many of our businesses. So one of the ways we've gone about solving that problem, which is that brokers want fraud prevention baked into their day-to-day processes, is that Trucker Tools, we've built out this network of different fraud alerts. So for those of you who aren't familiar with the Trucker Tools product, we are a and visibility platform that allows brokers to see where carriers are hauling their loads and then pass those updates on to shippers. And I think a lot of the focus on fraud prevention, from what I've heard from brokers, has been on pre-booking. So, okay, let's make sure we're vetting the carrier, that we've got all the right documentation, that we're making sure they are who they say they are. But so much fraud actually happens post that because of just the more advanced ways that scammers are taking advantage of systems. They are buying MCs on Facebook Marketplace groups and actually getting access to legit email domains. So that's why we thought it was so important to actually bring fraud alerting post booking. And that's what you're seeing here. So we've got 6 alerts out in market right now. We're identifying literally tens of thousands of loads each month that trigger at least one of these alerts. So it could be a carrier who we know they only have 4 assets, and we know they only have 4 assets and they're booked on 15 loads simultaneously. They're spoofing a device. They are potentially hitting an offshore data center. We're going to let customers know at that point, post booking, that there has been an issue identified. And what's really cool is I had a number of conversations at the TIA with customers who were saying how impactful these alerts have been on their day-to-day ops. So, top 25 brokers using this, Teams chats going around saying, even after we've gone through this really rigorous vetting process that we have, we're still catching hundreds of bad actors post booking. And I think it just speaks to the criticality of constant vigilance here. It's not just build a good vetting platform. It's actually always know what's happening with your freight. So I'll get off my
This is
soapbox,
awesome.
but it's been really, really cool to see this out in the market.
And I understood everything you just said without having to use ChatGPT to decode it for me. So that's probably the best part.
Wow. Well, thank you. I go to some of these conferences sometimes, or I read things. I'm like, am I the dumb one? Which is entirely possible, but I appreciate some really straightforward, explanations.
So as in logistics, things get unpredictable. I have a bit of logistical issue at the moment, so I'm going to have to unpredictably drop and let Kary bring us home.
Oh boy, great.
Yeah, we have things coming to the house, and they're an hour and a half early. So my kids are both running down, all 4 running down in sequence to tell me to get off the show. But I trust that everyone is in great hands with Kary to bring us home.
Well, happy Easter to the Adamo family, and talk to you next week.
You as well. We'll see everyone in a couple of weeks on the next episode. And again, sorry to hop off early, but long weekend, short podcast. Bye, everyone.
Love it. All right. Well, now it's become a monologue for me. So thank you to our listeners who are soldiering on. But really not a whole lot left to go through. Just a couple of call outs. DAT in the wild. I know we're still in the thick of conference season, so wanted to call out a couple places that will be over the next few weeks. I will be at the Broker Carrier Summit week after next in Indianapolis, April 28th to the 2nd of May. I'll be speaking on a panel about visibility. We've also got some of our other DAT leadership team, Jeff Hopper, Christian Greiner there, Laura Mendoza from sales and from our customer service team attending. So looking forward to having the opportunity to talk with both sides of our network, brokers and carriers. I went to the summit for the first time last year, and it was awesome. It's really different. There are no booths, there's no exhibit hall, so it actually forces everyone to just talk to each other. And it was a really refreshing change. So looking forward to that one. We're also going to have Jarrett Stowe, our head of broker product, speaking at the Freight Waves Fraud Symposium on May 14th in Dallas. This is the first of these events, so I'm sure he'll be speaking about these fraud alerts and some other things we have cooking, especially not just on Trucker Tools, but on the DAT product side. And there's more. We're also going to have a couple of reps at our Gartner Supply Chain Symposium. So this is more shipper focused. We've got Chris Kaplis speaking, Mike Weaver, Andrew Duke, Chris Doyle, a number of people who are going to be there in Orlando. So give it a shot if you'll be there too. And I would be remiss to not mention that .con tickets are now on sale. We'll be in Chicago. So I know it's probably, this would actually be interesting. We should look at the metro area at some point that has the most number of DAT users. I would venture to guess Chicago is maybe one or two. Um, but please join us. We're in Chicago. We'll actually technically be right by O'Hare. So if you're flying in, it's actually even easier than you expect. You don't need to sit on 90 for 45 minutes to get into the city. It's going to be really simple. It's going to be awesome. So check out dat.com to find ticket sales. All right. Just real quick, we did get one question. Thank you, Adam. How does a Trucker Tool customer access these alerts? You actually should already have access to these. We've pushed them through to all of our current tracking customers. So if you're not seeing them or you're not sure how to see them in the UX, or you want to set up specific email alerting, just reach out to your rep or feel free to ping me after the podcast and I'll make sure you'll get set up. All right. Well, let's end on the note that we're going to end on every week, which is a fun giveaway. We're going to be giving away a DAT Trucker Tools water bottle. I actually have mine right here if you're watching on LinkedIn. And not just as a water bottle, but also doubles as a coffee flask, which I'm drinking my coffee from right now. So please give us a guess by the end of today. So that we can let the winner know early next week. We're going to make this tracking themed. So we are looking for you guys to guess the number of tracking requests on loads initiated today to win a DAT Trucker Tools water bottle. So how many loads do you think we are actually going to start tracking for today? Give us a guess and drop it in the chat, comment on this LinkedIn, tweet at us, and we will announce the winner next week. All right. Well, here's where I would usually wrap it up with Ken, but alas, everyone has just me to listen to. So I will go ahead and end this now, but thanks everyone for tuning in. We're really looking forward to continuing to deliver on our commitments to everyone and share what we're actually cooking up and working on. So please give us feedback. What do you want to hear more about? Do you want to see more charts? Do you want to hear us speculate more? Do you want to hear Ken make weird analogies? We are all ears. Have a great weekend.